Hey besties, how's it going? My name is Jeff. If this is your first time here, then welcome to the channel. And if you've been here before, then welcome back. So today I want to tell you a little bit about how this ETF portfolio that I've been managing this year has been performing. And if you're new to this channel, I should just say that at the beginning of the year, I decided I really wanted to beat the stock market with my ETF picks. At the beginning of every month, I would invest about $300 into each of these 5 ETFs. And I thought, if I can do this right, I might be able to beat the market. So let me just show you the 5 ETFs. The first one is Vanguard Small Cap ETF, VB. The second one is Avantist US Small Cap Value. The third is Vanguard Value. The fourth is Vanguard Information Technology. And the fifth is Vanguard Healthcare ETF. So this is just a visual to show you that I've allocated my money across 5 different ETFs, approximately 20% into each. And the first thing that jumps out at me is that the Vanguard Small Cap and the Avantist US Small Cap Value, that's 40% of my investments at the start of every month are going into small cap stocks. And that's really different from the S&P 500, which is all large caps. So I'm betting pretty heavily that small cap companies are going to outperform large caps. And then the other kind of slant is that the Vanguard Value ETF is investing in a lot of companies that are profitable, but these are not growth companies and they don't tend to be high-tech names that are really expensive, momentum kind of stocks. These are more tried and true, mature businesses that throw off profits consistently year after year. Much more conservatively run than a lot of the growth and tech stocks that have done well over the last few years. And then, of course, I'm investing in the Vanguard Information Technology, which is a tech fund, and also the Vanguard Healthcare. I think the healthcare sector is going to do really well, not only this year, but in the next several years. And I really want to make sure that 20% of my portfolio is allocated toward healthcare companies. Now, what I wanted to tell you is that something I noticed on Friday, which I hadn't seen yet this year. And as I mentioned, I invested 20% in the Vanguard Information Technology. It's just a tech ETF. And I invested in that because I didn't want to be left, kind of out if tech stocks did well this year. I had no idea how powerfully tech stocks would do at the start of 2023. So that particular ETF, VGT, has returned 14.14% so far. And I started to think, oh my gosh, I had no idea tech would be the sector to really lead the stock market this year. And I only have one ETF devoted to tech names. But what I noticed is that on Friday, the stock market actually punished tech stocks. They did really poorly. And these value and healthcare and small cap stocks actually did really well. And I don't know where the market is going to be going. Nobody can really predict that. But what I liked is seeing that some of these small cap stocks and some of the value and healthcare stocks, which had really been lagging for the beginning of the year, are finally, it appears, starting to show a little bit of bounce. So let me just tell you what the overall stock market, as measured by the S&P 500, has returned 7.15%. And I should say that's not the overall stock market. VTI would be a better gauge of the entire stock market, small, medium, and large caps. But my benchmark is VOO. That's the S&P 500 ETF. So that's returned 7.15%. Now I'm just going to run through the stocks in this portfolio. I should say the ETFs. AVUV has returned 10.95%. VB has returned 9.92%. VTV has returned 2.58%. VGT, as I mentioned, 14.14%. And VHT, the healthcare ETF is negative 1.23%. So you can see one of these ETFs is actually negative in the year when another one of them, the information technology one, is actually 14.14%. So you can see there's like a 15% range between the tech stock ETF and the healthcare ETF. So I like seeing that the healthcare ETF actually showed some bounce and looks to be doing well, even if it's just for one day. The year is long and we've just started. So let me just run through a few of the stocks that kind of jump out at me. Now, with AVUV and VB, these are the small cap ETFs. I don't really want to get into the individual holdings because these ETFs hold hundreds, if not thousands of stocks, and I'm just gaining exposure to the sectors. But with VTV, I actually have investments in companies that I know and I like. One of them is Berkshire Hathaway, which is the number one stock in that portfolio. And then there's United Health Group, Johnson & Johnson, ExxonMobil, and JP Morgan Chase. So what I like about VTV is I like all these companies. I understand them, and I feel good about holding these for the long run. And so I like that with VTV, I get those stocks in the portfolio. Now, what's interesting is the return is only 2.58%. Now, that's positive, and I will take a positive return any day of the year, especially compared to how poorly stocks performed last year. But I like that I'm able every month to buy shares of VTV, and the stock price has only gone up for this ETF 2.58% so far this year. And the reason I actually like it when stocks don't go up in prices, I want to be able to buy more when the prices are low. So it's actually a really good sign for me that some of these ETFs have not appreciated a lot in price, because that means that I'm going to be able to buy more shares when their stocks are low. So VTV, I just mentioned those holdings. VGT, very interesting. This is that Vanguard Information Technology ETF. And I know that's a really long descriptor, but this is basically a tech ETF. And the way this is weighted is that Apple and Microsoft are the two biggest holdings in this ETF. And each one is about 20%. Apple's 20.40% and Microsoft is 18.10%. So each month, at the start of the month, when I invest in this ETF, about 20% is going into Apple and 20% into Microsoft. So I'm getting to invest in these two companies and about 100 others.
That you are so not, oh God. Balls.
And I'm able to do that with one purchase. And what I like about that is, if it's up to me and I had to decide to buy shares in Apple or Microsoft, I would think about it, and I'd hem and haw, and I'd try to figure out which one was a better price and better value, which one was cheaper, and then try to time it. And when there are all those decisions, I just probably put off doing things. That's just my nature, is that I'll wait, and then maybe wait another month and wait another month. And what I like about this ETF is I just buy it every month without thinking. And sometimes, that for me works really well, because it takes the human emotion and the decision making out of the equation. So every month anyways, I'm buying shares of Apple and Microsoft in VGT automatically. And finally, VHT, the one that I mentioned is negative 1.23% on the year so far, holds United Health Group, Johnson & Johnson, Eli Lilly, Pfizer, and AVUV as just the top 5 holdings. What I like about this is this particular ETF is down negative 1.23% so far this year. So when I buy these shares, they haven't, zoomed up in price like the tech ETF. So I'm able to buy more shares of the underlying companies every time I place an order. So VHT is down negative 1.23% so far this year. But what I like about this ETF is that the top holdings are United Health Group, Johnson & Johnson, Eli Lilly, Pfizer, and AbbVie. And these are the companies that are in the healthcare market, the healthcare sector. They're kind of the kind of companies making vaccines, pharmaceutical products, medical devices, healthcare insurance, all the stuff that we depend on going forward. And I like that the prices are staying low, because what that means is each month when I go to buy my ETF shares, I'm able to buy more. When you look at VGT, the information technology ETF, Apple and Microsoft are both up a lot so far this year. So when I buy those shares, they're getting more and more expensive every month. So believe it or not, I like it when share prices go down, and I like the fact that VHT, the Vanguard Healthcare ETF, is actually slightly negative this year, because I'm going to be buying shares every month of this year. I like the idea that I'm able to buy shares when they're cheap. So overall, my portfolio of 5 ETFs is up over the S&P 500 by such a small amount that it's really insignificant. So right now we are kind of even, and when I look at this portfolio, it's how it performs over time, and I'm just using this year as a kind of barometer. If I'm able to outperform the S&P 500 by 2% or maybe 3%, or ultimately if it could outperform by 5%, that would be amazing. But if it doesn't, it's not a big deal. If it does not outperform the market, that will be a signal to me that I'm actually just as well off buying a broad-based diversified ETF, one like VTI or VOO, and just holding it. Because if you can do as well with one ETF than 5, you can save yourself time, you can save yourself having to pick ETFs, and VTI is such a low-cost ETF. I'm so glad to see you guys. Thank you so much for watching, and I will see you in the next video.